Hey guys, welcome back. Today we're going to talk about what's happening in the real estate mortgage market over the last week. Because there are so many trending topics happening on a daily basis, even an hourly basis, I want to do a quick video, kind of a snapshot, a weekend review, if you will, of what's going on in the real estate mortgage world so that you can make informed decisions as a homeowner, as a buyer or seller in this crazy market. But before we do that, I'm Jeb Smith, real estate broker here in Orange County, California, and I want to thank you for taking the time to watch. If you're new to me, my channel is all about real estate, all about mortgage, trending topics, and what's happening in that world. So do me a favor, hit the subscribe button. If you like the content, hit the like button. Again, it helps more people see it. Ultimately, my goal is to help educate buyers and sellers, homeowners, so you guys can make informed decisions. So thanks again. So let's start with kind of probably one of the bigger things that's happened this week, and that's data that was released on forbearance. So I've done a lot of videos on forbearance over the last week, which I'll link to the last one here above, where I give a little rundown on forbearance and some of the options that are out there. But you know, there were numbers released today or yesterday that there are 3 million people currently in mortgage relief or mortgage forbearance, if you will. So 3 million people have reached out to their lenders to ask for mortgage forbearance, and they've been granted mortgage forbearance. That equates to 5.5% of all active mortgages out there. Crazy, staggering numbers, and that's $651 billion in unpaid principal. So that is a really, really big number of people that are in forbearance, unable to pay their mortgage. Now, what's crazy is that's not even the end of it. There's going to be more people that are requesting forbearance in the future, so that number is going to go up. It's probably going to continue to climb. It's probably going to be over $1 trillion, maybe even more at some point. So the reason I bring this up is because, you know, a lot of you guys have reached out talking about forbearance options, talking about, you know, why isn't my lender giving me a longer forbearance term? You know, why are they requesting me to pay it in a lump sum at the end? All of that good stuff. And we've done videos on that, but what I'm going to talk about here right now is that, you know, an update on servicers. I clearly left my cell phone on here, so I'm going to do a little quick video and put that on silent. So anyway, you know, servicers aren't required. Well, they've been told to give you up to 1 year of forbearance and for it not to affect your credit, right? But when you call, the lenders are saying, hey, I'll give you 3 months, and in 3 months, call me back. Maybe we'll push it out. Maybe we can modify your loan, but at this time, we can't really discuss it. So, you know, we'll deal with it in the future. Some of you have called. They said, hey, look, we'll give you 3 months, but in the 4th month, all payments are due. So there's a lot of different things happening when you call for forbearance. And the reason is because each servicer is a little bit different because of how, you know, they service loans, right? Not some servicers service their own portfolio and then they service other loans. Then you have companies out there like Mr. Cooper who only do servicing. They actually don't really originate or hold their own loans. They're primarily a servicer. And then you have like Bank of America, who does a little bit of, you know, they service their own loans, but they also service other loans. So the reason I'm bringing this up is because, you know, these servicers, whether or not you're still making your mortgage payment, are required to pay the mortgage holder, the mortgage-backed security holder, the bond holder of that loan. And I know this can get complicated. I've done a video on it where I actually draw a diagram, which I'll link to above. But essentially, you know, when you pay your monthly mortgage every month to the lender, to the servicer, they then turn around and pay the owner of that loan, the bondholder of that loan. So whether or not you make your payment to that lender, they still have to make that payment to the bondholder of the mortgage-backed security. And so part of the problem here is that, you know, because there's $651 billion currently in forbearance, that means that there's going to be $651 billion paid out to the owners of these loans, and the banks aren't going to have that money coming in. That creates something called a liquidity issue. And so basically a liquidity issue is when the banks don't have the funds to be able to continue to pay these servicers. It's going to create issues because, you know, it's these banks, while they have money on hand, they don't have that kind of money sitting on the sidelines. And so, you know, the federal government hasn't created anything yet to back these servicers. And so that's part of the problem. Is servicers aren't willing to work with you, aren't willing to negotiate with you, aren't willing to give you the best terms available because they are probably scared. They're unsure of how they're going to continue to pay the mortgage holder, the bond holder of that loan, if they don't have payments coming in. That's why when you call, they're giving you the shortest term possible on the forbearance versus giving you a full year like they were required to do. So there are now coalitions out there that have been created that have big names backing them that are more or less trying to get federal regulators, federal government to create some sort of liquidity for the servicers so that even though you're not making your payment, they have money that they're able to get from the federal government or a loan or whatever it is so that they have money to draw from to continue to pay these bond holders. Because that would then free cash up and allow them to work with you, offering better terms, offering longer forbearance, so on and so forth. So, now keep in mind, none of this is passed yet. The federal government hasn't created the stimulus for the servicers, but my guess is it's going to happen here probably within the next couple of weeks because this is a really big portion of the economy. And if these servicers go under for any reason, it's a ripple effect. So at some point there will be liquidity created for these servicers, and these coalitions are putting things in place that they want to see in them. One of the things that they have put in place is they want basically all forbearance options to be equal across the board. So if you're offered forbearance, they want you to have the same option that was given to me, which I think is crucial, right? Everybody should have the exact same option when doing the forbearance. Another thing that they've put as part of that measure, or that they want to see in that bill, is that, or that stimulus rather, is that that you're made off no worse when you come out of this than you went in. So if you had good credit, everything was good going in, they don't want to see this affect you, right? They want to see you come out of the forbearance just as you went in, which I think is really good, right? That gives you the relief of knowing that you can do it without any negative effects, and you're not scared on calling them to have that conversation because you're worried about how you're going to come out of this situation. So that's a really big portion of what happened this week. Those numbers that were released, the talks of the liquidity going to the secondary market for these servicers. Because again, we need to keep them afloat so that the whole economy doesn't get hit negatively. Another big thing that came out this week is interest rates. Interest rates have been reported at a 30-year low, which is huge, right? So if you're looking to refinance, maybe looking to buy a house, interest rates are really, really good right now. So make sure you have your paperwork in with your lender if you're considering refinancing. That way you're not having to call them. That way you're not having to get all your paperwork at the last minute. Once interest rates hit a number that you're comfortable with, you can have it in there. Once interest rates are where you want them to be, or a number that you're comfortable with, you can just lock it and move forward. So interest rates are good if you're planning on moving forward in that direction, or pulling cash out or what have you at this crazy time. So another thing, housing starts, biggest monthly drop in 36 years. What is a housing start? That's basically new construction, new properties being built. So new construction clearly is on hold in a lot of areas due to what's going on with coronavirus. Construction companies, builders are putting things on hold. People that were considering building houses are putting them on hold. There's issues with the permitting process because there's a lot of places closed. There's also issue getting materials because a lot of this stuff comes from China. Import export right now is crazy with coronavirus, and so housing starts are at the biggest drop in 36 years. But crazy enough, it's actually up over this month last year at the same time. So we're still above where we were this time last year, but month over month, huge drop. Lastly, Chase stopped accepting HELOC applications. What is a HELOC? It's a home equity line of credit. It's a second mortgage. It allows you to basically have a credit card on your equity. I've done videos on that before. You can check them out on my channel. But basically, Chase, again, not the most aggressive bank out there, but they did come out and say, hey, we're not doing home equity lines of credit right now because we're uncertain of what's going to happen in the market going forward. My guess is bigger banks will probably follow suit on that. They all kind of stick together. Again, not the most aggressive in most cases, but they kind of stick together. So I would imagine anybody else doing home equity lines of credit out there are probably going to put them on hold. You can still draw from them if you have them, but going forward, they're not going to do them. So for the time being, I would imagine that the change going forward. So that's some of the update and what's happened this week. I hope it's helpful. I know it's a long video. I know I kind of rambled on there, but I want to provide you as much insight on this stuff so that you can make informed decisions going forward. So appreciate you taking the time to watch. If there are additional topics you want me to touch on, do me a favor, comment below. Reach out to me directly. A lot of you guys have, and I appreciate that. And I appreciate you taking the time to watch. See you again soon. Have an awesome day. Bye-bye.